Hey everybody, welcome back. Well, it looks like it's happened again, ladies and gentlemen, for the third time in 7 months. First off in May, and then in September, and then now the combination of number one, fear, and number two, most importantly, excessive leverage in the markets once again distorted the price action and resulted in another liquidation cascade, a flash crash that really was a lot worse than it needed to be. So Bitcoin dropped 9k in a mere hour. Surprisingly, I gotta say Ethereum is holding up quite well. Now, in case you're not sure of what a liquidation cascade is, what's basically happening in this bull run, now I'm referring to the 2020 to 2022 bull run, that is associated with the third Bitcoin halving event. So in contrast to the 2013 and the 2017 runs, this one, right, the one we're currently in, has been characterized by the explosion of derivatives platforms, right? So where traders can take out crypto collateralized loans, basically borrowing stablecoin liquidity against their crypto holdings to go out and buy more cryptocurrency. So in other words, I have 1 Bitcoin, right? And then I go out and borrow, say, another 9 Bitcoin, right? So what I've basically done is created a 10 Bitcoin position for my 1 Bitcoin collateral. Now this sounds all fine and dandy, but what if the price of Bitcoin moves 10% against me? Right, that's all it takes for me to get liquidated. I lose everything, my entire position, it's gone. And you know, this is exactly what happened to a lot of people for the third time, first, second, third time in 7 months. Right, this time around, over 370,000 investors liquidated. Right, traders just falling over each other, right, falling over each other, trying to protect their positions. $2 billion worth of longs liquidated in hours. And then, perhaps slightly amusingly, almost $500 million worth of shorts on the way down also liquidated as prices rebounded up again. So by the looks of things, everybody wants to be greedy and then everybody ends up losing. Well, except for the smart money and the whales that end up picking up your crypto for the cheap. Now, the good news is the excess leverage has, for now, right, been shaken out just like it had been down here, here, and here. But the bad news is, as prices begin recovering, look, we're going to see leverage positions re-enter, essentially flood the market again, particularly by retail traders who don't know how to exercise proper risk management. The worst part of all of this is the whales now have an effective proven tool to help them accumulate cheap crypto, right? Simply start a liquidation cascade. That's all you have to do. Kick that domino off, that very first domino, which is then going to cause the easily spooked and over leveraged retail traders to, I hate to say it, but scatter like roaches, right? And then all the whales have to do is come in and swoop up this crypto at bargain bin prices, right? Either from the panic selling or from the forced liquidations. This sneaky tactic gives whales the uncanny ability to dump a $2 to $3 trillion market by 20 to 30%, right, in days or hours. Right? It's a market manipulator's dream, where the victims are all the retail traders, ordinary people like you and I, who could have made bank, but instead decided to become casino gamblers. Okay, so what's ahead? Well, nobody has a crystal ball, but I gotta say one of the risk factors here is actually the stock market. So the S&P 500, right, is correcting, partly due to Omicron and partly due to persistent issues with the over-leveraged Chinese property market. But I gotta say the broader issues is that equities, right, it's been overheated for a while. So if there are enough catalysts that really tip the stock market kind of over the edge into a proper dump, so virus, inflation, stimulus tapering, contagion from the Chinese property market, I'm not talking about a 3 to 10% minor correction, right, like here. I'm talking about a real bear market that can last 2 to 3 years, right, in the S&P 500, right? Then we're probably going to be in for some rough times. But in any case, let's look at some short-term possibilities going ahead, focusing on Bitcoin, right, as the confidence anchor for the entire crypto space. Remember, after a dump, everyone's looking at Bitcoin to gauge market sentiment, along with things like altcoin dominance as well. Hey, it's looking pretty good at the moment. You want to see people are flying out of alts as well, out of fear, or still continuing to rotate capital into the space. Okay, so looking at possibilities for Bitcoin, look, the optimistic one is V-shaped recovery followed by maybe even a blast off towards 100k. This is what the hype YouTubers might want you to think. In my opinion, it's not very probable, right? But you never know, anything can be possible in crypto. More realistically, we're probably going to be seeing some sideways trading action for a bit of time, right? Maybe between 42k and 58k, or ranges in between. In the worst case scenario, I think we could break down further, right? Break down under 42k, maybe retest in my opinion, the worst case scenario, the 28k low from between May to July, right? That would effectively give us a double bottom, which would put us on good stead for 2022. Now, this does come with precedent. If we look at the S&P 500 over the long term, the last couple of decades, double bottom, right? Double bottom over quite a few years, followed by a massive blast off, which is yet to see any real sustained correction, right? Which is kind of concerning. But look, one thing I am pretty certain about at this stage is I think we can forget about a 100k Bitcoin by the end of the year. Look, on-chain data and general market sentiment are all pointing towards, in my opinion, a lengthening cycle where our final blow-off top, look, it's looking like it's going to be towards the end of next year, 2022. And look, the price targets are still going to be on target, say between 150 to 300k, let's say around 200k in accordance with the stock to flow model. Look, I think all of that is intact. It's just the time frame. We have to be patient about this. And again, in all likelihood, I don't think it's going to be a smooth ride, right? We're likely going to see more flash crashes. So hey, it's never a bad idea to take profits, keep some cash aside, try and buy the dips. And look, if you are addicted to leverage, right, I'll just say this. Right, the best time to borrow money is right after a crash. Not advice, but you don't want to be opening leverage longs right when it's during peak greed. This is not where you want to enter leverage long positions, right? You want to be entering, if you want to borrow money to buy crypto, down here, right after crashes, right, 20, 30, 40% corrections. If you have to borrow money to buy crypto, this is where you want to enter. To put it another way, if I use the May crash as an example, right, down here, accumulation zone. High probability trade with the gain amplified if you choose to buy leveraged. Up here, right, low probability trade, right, with the loss, the amount of loss amplified due to the fact that you use leveraged. Again, I'd urge you to check out the anatomy of a flash crash video, which I'll link down below. It's got a lot of information about liquidation cascades and tips for trading leveraged. All right, that's all for today. Let me know if your portfolio got smashed or perhaps you kept some money aside and bought the dip. Now personally, right, I picked up some quality layer ones like Polkadot and Phantom. I also picked up some smaller cap metaverse tokens that I'm bullish on long term. I'd love to know what you guys are up to currently during the predicament that we are in. All right, have a nice day or evening wherever you are, and I shall see you in the next one.